Buffett's company Berkshire Hathaway sold some of its holdings this year, even though it was a buyer as it reorganized its portfolio. The market pays attention when Warren Buffett, one of the greatest investors of all time, makes a move. Under regulatory filings, investors can view Berkshire Hathaway's quarterly stock purchases and sales. Berkshire Hathaway manages an equity portfolio with a market value of about $337 billion. Welcome back, everyone. Today's video, we'll talk about 6 new stocks Warren Buffett is buying. Remember to subscribe to our channel. While Berkshire frequently draws a lot of attention to its purchases, investors should also pay attention to its sales. Buffett's investment strategy is founded on the idea that a margin of safety should come first. A margin of safety is a feature of an investment that helps guard against investors losing money. There is a $2 margin of safety, for instance, if a stock trades for 10 per share, but the company's assets are worth 12 per share. The asset's intrinsic value should keep the company's stock price from dropping too much. Buffett avoids investing in the garbage. He rarely buys failing companies, regardless of how inexpensive they get. It's far better to acquire a wonderful company at a fair price than a fair company at a wonderful price, is one of the best phrases from Warren Buffett that new investors can remember. He also says, the most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with or against the crowd. Although buying low and selling high is the obvious objective of stock investing, human nature often drives us to make the opposite decision. We feel motivated toward financial independence when we observe all of our peers as successful business people. We also tend to sell our shares as soon as a market meltdown occurs to avoid future price declines. Buffett enjoys stock price declines because they present opportunities to purchase at a bargain. This helps to explain why 2022 has been a very active year for Buffett. Would you panic and flee if you were in your favorite store when you saw all the prices had been reduced by 20%? Not. Buffett welcomes price reductions on his preferred stocks. One of the most important Warren Buffett quotes on investing you can take in is, "If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes." He doesn't pick stocks based on his expectation that they would appreciate this week, this month, or even this year. Buffett invests in equities because he intends to hold on to companies for the long run. Although he still regularly sells equities for various reasons, he approaches most of his assets with the intention of holding them for the long term. According to Buffett, a set-it-and-forget-it investment like an S&P 500 index fund is one of the finest investments most people can make if they can't adopt a forever mindset with their equities. Although Berkshire selling a stock does not always indicate that you should sell it or how the stock will perform, it is nevertheless important to be aware. If you own a stock that Berkshire is selling, your investment thesis may need to be completed. The following 6 stocks were all sold by Berkshire this year. Number 1. Verizon. Approximately 158.8 million shares of Verizon, VZ 0.36%, a significant telecommunications corporation, were held by Berkshire at the beginning of the year and were valued at close to $8.3 billion. However, Berkshire closed out that position in the second quarter, possibly due to the corporation realigning itself for a different economic and financial future. Berkshire might have had cause for alarm. Verizon decreased its adjusted earnings guidance for the entire fiscal year from a range of $5.40 to $5.55 to a range of $5.10 to $5.25 when it reported its second quarter results. Additionally, the corporation decreased its forecast for revenue growth. Number 2. Store Capital Corp. As of 2022, Berkshire owned Store Capital Corp., the only real estate investment trust, REIT, in its portfolio for under $840 million. Store paid out at least 90% of its annual taxable profits in dividends since it is an REIT that receives preferential tax treatment. The company used a triple-net lease single-tenant business model, purchasing properties and leasing them back to the owners so that they would be responsible for any maintenance costs. The stock has gone as far as it can go since, in September, the fund's GIC managed by Oak Street announced they would acquire Store Capital for almost $14 billion in cash. Number 3. AbbVie. AbbVie was a biopharmaceutical business that Berkshire initially owned approximately $410.7 million of. However, the company was rapidly sold off in the first quarter of the year. AbbVie hasn't had a bad year, with the stock up more than 21% and significantly outperforming the general market. AbbVie's third quarter results were mixed, with adjusted earnings above forecast but lower revenue than anticipated. Additionally, the company cut the upper bound while confirming the midpoint of its full-year profits projection range. Number 4. Royalty Pharma. At the beginnings of 2022, Berkshire sold its stock in Royalty Pharma, worth about $344 million. Like an incubator, Royalty Pharma finances biopharma research and development in various ways before purchasing royal interests in such businesses. Given that the stock has been up more than 5% in a weak year, it is difficult to determine exactly what Berkshire did not like. Earnings and revenue during the third quarter of the corporation exceeded analyst expectations, and the full-year forecast was increased. Perhaps Berkshire merely didn't believe the business had promising long-term potential. Number 5. Bristol-Myers Squibb. Berkshire disliked its exposure to the pharmaceutical industry. Therefore, it was a horrible year to be a pharmaceutical business in the corporation's portfolio. In the first quarter of 2022, Berkshire sold the roughly $324 million of Bristol-Myers Squibb stock it had at the time. Something earlier this year left Buffett and Berkshire with a terrible taste in their mouths when it came to the pharmaceutical sector, because this is another stock that has performed quite well, up more than 24% this year. Number 6. Wells Fargo. It was known going into this year that Buffett and Berkshire had it with the sizable bank Wells Fargo, WFC, negative 0.10%, when it was discovered that bank workers had opened credit cards and bank accounts for clients without permission in 2016. Wells Fargo found itself in deep water. The bank has now been subjected to several fines and punitive regulatory actions, such as an asset cap preventing it from expanding its balance sheet. The employment of Wall Street veteran Charlie Scharf as the bank's CEO in 2019 was also said to upset Buffett. Although Scharf seems to be doing a respectable job, Berkshire has owned the shares for more than 3 decades until the transaction. The greatest value investor in the world is regarded as being Warren Buffett. Value investing prioritizes purchasing investments at low prices compared to their true worth. A value investor's basic objective is to purchase a firm's shares for less than $100, ideally much less. Value investors look for and invest in businesses whose intrinsic values are significantly higher than the suggested enterprise values reflected in the prices at which the business's stocks are traded. Value investors like Warren Buffett anticipate that the market will eventually realize a company's full value, leading to an increase in the stock price of the business and a profit for the value investor. The best illustration of the effectiveness of long-term compounding is Warren Buffett. Buffett benefits from the power of compound interest, dividend reinvestment, and the ability to continuously reinvest the operating cash flow produced by Berkshire's businesses. How effective is this? Since Buffett took over in 1964, Berkshire has generated an annualized return of 20.1% on average versus 10.5% for the S&P 500. This might not sound all that remarkable until you consider that over time, this has led to a total gain for shareholders of 3,641,613% as opposed to merely 30,209% for the S&P 500. Buffett typically works long hours in his Omaha, Nebraska office. Investors are frequently shocked to find that he spends most of his time alone, reading or doing nothing. In Buffett's opinion, gathering as much financial knowledge as possible is a key factor in his success. He sees knowledge as something that grows with time. That's all for this video. We will be back soon with another informative video. Remember to like and share this video. Until next time.